Happy Quadruple Witching Friday, traders. It is 8:02 a.m. Chicago time on Friday, the 18th of September, 2015. Again, expiration day. Thanks for joining me. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not indicative of future results. Overall, just a couple things to cover to start here. Of course, unless you're completely off the grid, FOMC meeting yesterday gave us almost 40 points of range in the S&P futures on the day's session. The key Fed statement released, or the summary of what we learned from it, is that the recent global developments may restrain U.S. economic growth and inflation near term. Inflation continues to run below target, partly reflecting energy and import costs. Remember, energy and import costs are being pushed down by a strong U.S. dollar, not to mention the effect of China cutting back on its production and orders. So, what we have is a Fed that's, for the first time, being forced to react to what is happening globally as opposed to what is happening domestically. I think that overall, if we didn't have the correction from China last month and the issues there, we would have seen some sort of an adjustment. But you look across the globe at the central banks, and they're all in a defensive position and a stimulative position. So I'm going to hold to the same statement that I've made all year long, and that is that the Fed has really no room to move on interest rates just yet. It'd be nice to get a surprise, though. I would have liked to see a 90-point drop or something to give us the volatility. But most analysts are now expecting the Fed to raise rates for liftoff to start in December of this year, while some are looking at March 2016. If you look at the Fed dots, there was one of the members of the committee actually is pushing for negative rates, looking the other way, which was very interesting. China stocks had a muted reaction to the FOMC data, while the Nikkei dropped 2%. European equities are lower as the U.S. dollar drops and the euro strengthens. Gold is also higher, of course, as a result of the dollar drop. Again, today is Quad Witching Friday. So you'll likely continue to see some manipulation as hedgers, delta hedgers, and so forth protect their positions. The September contract in the futures, in the index futures, actually expires at 8:30 in about 25 minutes. And then beyond that, it's just a matter of positioning. And also there are some options that expire later in the day, at the end of the day. And that's what's likely to stimulate a lot of the volume coming through. Anyway, that's what we have as far as what's on deck for today. We have the index of leading indicators at 9 Central, expecting 0.2%. Household net worth is expected at 11 o'clock. I don't have an estimate for that. Previous is 1.629 million. And at noon Central, we have Baker Hughes. The S&P is expected to adjust its ratings for Portugal. Moody's is expected to look at its ratings for France, Slovenia, UK, and Fitch for Finland. As far as speakers, looking at the calendar, I don't see anyone of interest coming on today. Nope, nothing. So it's free and clear. I would expect today to be a fairly muted trade. Let's look at the technical picture. There's a lot to say there after yesterday's action. So you should be looking at my trading screen here, or my S&P screen. And overall, the market has responded the way that was expected. So from yesterday's Trader Bite, we were looking for, and by the way, the primary hypo was absolutely on point. I'm not saying that to brag. It's just that the goal here again is to always set an expectation or a bias and see what the market confirms early on, and to go with that bias, and trade from that direction. That's the direction of strength. For those of you who heard the interview on Chat with Traders, you heard me say that my approach is to identify the 800-pound gorilla in the room, which way it's going, and then to fight with it, alongside it in that direction. That's my approach. I don't have a bullish or bearish bias. I don't come into the day thinking all bull, all bear. I come into the day looking at, here's the bull scenario, here's the bear scenario, here's the neutral scenario, here's the outside scenario, and then wait for the market to tell me what's going on before I start to position myself with whoever has strength. So that involves identifying what the opening type is, where the opening is relative to yesterday's action, identifying who is likely to be in control. In other words, short-term or long-term traders are in control. Short-term traders mean I have to trade chop or from the outside in, or a regression type of plan, or if there is a gorilla in the room, then I'm looking for pullbacks to go in the direction of whatever the break is. That's hard to visualize. It's something I talk about a lot in the Stage 5 chat room, but it's hard to get into here in a short amount of time that I have. So overall, yesterday we were looking for rotation back down, and noise down into the point of control that we left behind from Wednesday at 79.50. I was looking for chop, 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 and then for it to start drifting up. And the reason I expected it to drift up is because as long as we stay above the LVN here, we had an auction that was incomplete on Wednesday. You could see here a weak high, an incomplete auction. The market ran out of time. The expectation is for it to continue to take that out in the day session. That's the high of the day, that green line, and it finally took it out right here. And then what I had said is that if the Fed does raise rates, and I'm looking at 1940.50 as the target below, but if it does not, then I expect the reaction to take us to 99.50 right up here. And you can see that on the Fed release came in right in here. It was very noisy. It came in at, so the high was put in at 2,000, just 2 ticks above the 99.50 target. And then it pulled back. It retested the 99.50 at 99.75. Then we have a drop back down to the point of control for the session. Beautifully traded. It certainly you certainly don't get that where it reacts even on when you have FOMC, you have a lot of volatility, and generally it does not react so nicely to that. Once it pushes through down to the 79.50 that we were targeting in the morning, then we get an excess low, and it starts this big rotation up all the way to new highs, and it continues to make new highs before it finds sellers up there at 2012. The sellers came in hard. You can see right here a fairly massive rotation from 2012-ish to down to the 1975 area, all in a span of about half hour, and then from there the market closed near lows. What does that tell us? So again, we were discussing this in the chat room yesterday after the close. This is telling us that we are likely to continue lower, again bringing 1940.50 into play. And so for today, the expectation was that the overnight session is likely to carry us lower, and here we are. We're trading at 1950.75, 1951. 1940.50 is right below. It is the point of control from the 11th, but also from the 14th. But also it is a microcomposite point of control. We are now only 10 points away. Let's look at the overnight session to see how that traded and what clues we can gain from it. And there you have it. The Asian session didn't do much at all. Like I said, the Chinese market was pretty much flat, and then we finally have a breakout pattern lower on the European Open, and then the European Open took us all the way through in what looks like a trend day, a double distribution trend day. Right here, we have a clear demarcation at 66.50, where the VWAP and the mid is right now, and I'm watching that for responsive. For if we get responsive on the open, in other words, if we find buyers responding to prices dropping so far, I expect a reaction in the 66.50 area. Unless there's some news or something, I don't see it past the 72, and the expectation is for it to fight early on. We're likely to have intermediate term OTF or intermediate term players coming into the market this morning, and we're likely. So what that means is because we're opening in an imbalance area, back into the bigger balance area. In other words, compared to yesterday, we are out of balance. We have moved away. You can see the strength here in this movement from where we closed yesterday. And so we're going to get a reaction. We're likely to get a reaction. There's a high probability of at least an open auction out of range that that chops around and then does this thing and then breaks the opening swing high or low before it decides which way to go. But I'm going, as always, I'm going to look for any responsive, meaning any movement towards the prior point of control. I'm going to look for any responsive action. If I don't see responsive action, the fact that there's no responsive action is going to lead me to press the shorts down into 1940.50, assuming they don't take those out in the next half hour or so. And then, of course, we have the economic release at 9. So overall, this has worked out absolutely beautifully and perfectly as expected. From yesterday on the overnight session, we expected a further drop into in and towards the 1940.50 area, and there it is. The market, as I said many times, the market follows a sequence. It has this behavior that it continuously tracks, and that's really what you're listening to here every morning, is that behavior having been observed and studied over so many years. We see it taking place all the time. So again, we're looking to target 1940.50. Right down here, we're trading 49.25, 48 right now. Expecting an attempt at responsive buying. I don't see buyers stepping in here and saying, okay, the Fed situation is behind us. Let's get in there, buy, risk on all the way. I don't see that. All we did yesterday is we deferred the uncertainty to October, which Yellen clearly stated that if she sees enough evidence, she will look at liftoff in October. So she's putting the market on edge. If not, then we're looking at December. And so there remains the same ingredients, or the same stuff is on the table. And there's no reason I don't expect there to be a reason for bulls to come in here and say, let's buy it up here at 1950 and just take it through all-time highs. The expectation is that they'll probably be pretty cautious, and I expect that there will be a responsive buying push early on. So I expect it to start trying, but if I see any weakness, I'm going to pound on this and look for 1940.50 as my key target. That's Hypo 1. Hypo 2, it chops around, takes out the overnight low, gets close, chops, and we see a large rotation up. Then I'm going to be looking for a pullback, but in general, Hypo 2 is looking for a choppy afternoon, wider than normal swing. So normal swing in the S&P, the harmonic rotation in the S&P is about 2.5 to 3 points. It has expanded to 3.5 points, not much more than that. In this volatility, and wider than normal is somewhere around 5.25 points at the moment. So if I see a big move, I'm going to be looking for rotations that are about 5 points or so, and then you're basically scalping both sides of those into the close today. I don't expect too much action going into the weekend. I know that's a lot to cover, and I may be making you dizzy with everything that I'm saying here because there's a lot to say. But today is Friday. It's quad witching. Be smart. You know, I've seen many of my prop guys come in on a Friday and just battle it out because they want to close the week strong. They have not hit their goal for the week or whatever their issue is. And they just dig themselves a big hole and it just carries over through the weekend and they become psychologically damaged temporarily into Monday, into Tuesday. It's just the toll and the cost of that is too high. I strongly advise you to, just like I advised you yesterday, to just sit tight, chill, be patient, and then if you're going to take action, take it once the Fed release, minutes after the Fed release has come out, because it's when the volatility and the opportunity makes its appearance. Uh, Today is a good day to wait for high probability setups, exercise some restraint, and pick your spots. It's a day where, if you're a day trader, you're looking for maybe 4 or 5 opportunities on the day, and that's it. That's the expectation. We'll see what the market tells us. The market is the master here. So I follow what it says, even though I try to have a plan for whatever situation ensues. Good luck today. Have a great weekend. I'll catch you on Monday. Take care.